So yesterday I brought up the idea of a seesaw, and we're right back, on it today. So we dropped after rising yesterday, we dropped back down today. So we've been up and down and up and down, and yesterday I brought up this idea that we were, showing some signs that we're at the beginning stages of the intermediate decline. One of the major indexes is really showing those signs. So I'm going to kind of show you that why it seems like we're increasing the likely that we're going to have a period of weakness here. It has a lot to do with what we talked about last night with those rate cut odds being as high as they are. We're going to take a look at the really bad breadth that we've had over the last period of time. I'm going to show you kind of how the different asset classes and the sectors have performed during this period of bad breadth and why it's a kind of a precursor, why it can be a leading indicator to more weakness. So I'm going to break all that down. Some interesting intermarket moves today that wouldn't necessarily suggest how that we're bullish. So you can kind of see why there was a little bit of risk aversion going on today. So I'll break all that down. And then our trade idea is actually in this discretionary, quasi-discretionary, quasi-staple space. Both those sectors happen to do, two of the only sectors that have been doing pretty well lately during this period of bad breadth. And this stock broke out in a really good way, and we'll talk about how to trade that. So let's go ahead and get started. Today is Thursday, August 7th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicators. We fell after starting and having a pretty decent day to the upside. We dropped throughout the day, came off the lows towards the end, but dropped, and you can see the intermediate line continuing lower, still in bullish territory, but still below the 80th percentile and the long-term market sentiment line. So still showing some weak bearishness there. Again, you can kind of see up here at the top that at the very least, we're still kind of gradually moving higher. The near-term line did fail to cross above the intermediate line. Remember, that cross is significant because it's between the reversal zones right now. So anytime the blue line crosses, that's significant there, and it's failed, right? So far, it's kind of holding and rolling back over. So really important to watch that. We are still a little bit less than 1% above the 30-day moving average. So, we're still, we're not bearish per se, but, kind of like we talked about last night that, the signs are there for weakness, right? And you can see this is one of those signs, the near-term line failing to get up above the intermediate line, failing to get into the upper reversal zone. It's still in bullish territory, so we're not done. It has not formed a bearish peak as of yet. But again, you can see just how tenuous it is, and we have the momentum line spending a third day in bearish territory, not oversold, so nothing too significant, but again, unable itself to get going back up. In fact, really since we've had this decline, your momentum line is pretty much only dipped its toe into bullish territory, and for the most part, it's been in bearish territory for this entire time. Pretty much again, since this is where the momentum line peaked post expiration. After having this, the move that we talked about before my trip, the nice, good, strong move, and then we rallied up again. Wednesday while I was gone, had a nice, good, bullish move, and then the momentum line came down as we had some very small ranges the rest of that week into Monday, and then it just has kind of stayed down. We've had how many down days? We've been kind of alternating between up days and down days, but we've had 5 down days out of 8 sessions, and one of those up days we were down from the open, and the other 2 you can see right there. So it's that you can see why we've been a little bit more bearish here lately, and which is why the intermediate line's been on a decline. Let's take a look at the Nasdaq 100, and again, VIX very similar, except its near-term line did cross above the intermediate line. It did jump into the upper reversal zone just barely, and the momentum line did climb out of bearish territory. Now, it's not in bullish territory, but at least it's not as bearish, so a little bit more of a bullish pattern. We were up 1/3% on the Nasdaq 100, so a little bit more bullish from that perspective. Taking a look at the Dow Jones, it was down 0.5%. That's not so bullish. A little bit of an engulfing pattern there. Got that bull tag. We're not bouncing, so far. The near-term line crossed back down below the intermediate line after forming and is out of bullish territory, excuse me, now. So that's not a good sign. Excuse me, for the Dow Jones, and this would be obviously a lower near-term peak, and we're very close to forming a lower near-term low point. The momentum line again below. I mean, we're not very far away from the intermediate line now, not being in bullish territory anymore. So, this is again characteristics of an intermediate decline, that we may be starting an intermediate decline here. And then finally, your Russell 2000. Not as bad as the Dow, only down 1/3%. It's remember, its near-term line did get into the upper reversal zone. It got up above the 90th percentile, so it was actually more bullish going into today. And then it dropped, right? Then we had the momentum line dropping down. Its intermediate line now is out of bullish territory, and you can see what's kind of going on there. So we're down 0.5% below the moving average. We haven't been able to get above it except for that one day, and it's just barely. So you see how everything's kind of lining up to show that, again, that we may be in the beginning stages. Now, when I say an intermediate decline, I'm talking about dark pink shading and a red line here on this chart. But what I'm also talking about is just like, again, a 5% drop on this chart that gets us probably down into this area towards that 23% retracement line, and then probably nothing more than that. So that's kind of what I'm referring to. All right, well, that does it for today. That's our market outlook preview. The full version of this video is available at marketscholars.com. There's a link in the description below that will take you there to the blog post. You have to be a subscriber to our site. The first tier that you can subscribe to is our foundation tier, Market Outlook Foundation tier, at $29 a month. That gets you access to all of our Market Outlook videos, the full versions of them, as well as the trade ideas that come in each one. The Market Outlook live stream, where we manage all those trades day after day after day, closing them whenever it's the right time. We talk about why and all of that. And then you also get access to our Market Outlook live trade tracker, where we track the results of all the Market Outlook trades day after day after day after day. So that's all available to you. You can sign up right now for $29 a month. Like I said, in the description down below. Thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that bell so you're notified when these posts are posted. Also, like the video down there, comment, share it with anybody else. Follow me on Twitter or Facebook or LinkedIn, any of the other social media accounts. See our content there. Share it with others. Like it there as well. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.